Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, it's just me today. Joe's on vacation. So probably be a quicker meeting, but feel free to ask questions. I'll go through the market update and go through the earnings trades, and we'll have Q&A and wrap it up after that. So let's get started. Okay, indices are all still in state one, hanging in there. Our pie actually shrunk 64 down to 59, so a slight decrease, and state ones are still above 45, kind of holding there, but still overbought. Let me expand this. As far as sectors, you can see, last week we had the real estate one flipped to two, so now we got consumer staples and healthcare also in state two. So getting some transitions to two from one. So let's take a look at the pulse here. This is all states. So state one, basically since we crossed over here, that kind of just been fighting that 45 back and forth. So, up above, kind of dipped, came up above, dipped, so it's just been kind of chopping like that. This whole rally, just kind of maintaining that level. So really just kind of, as far as that, I just, kind of look at the lows here from this move, which is right around 41 or so. So if we break below that, I would think we'd start going for that cross with the eights and the ones. So I just kind of look at that level. It's would be a decent indicator. Twos just picked up a little bit, nothing drastic. From last week we're at 9, so up like 3%. Nothing else really going on. So it's really between these two states that are the key. If we do get a pullback, I'd expect those twos to pop, the ones to fall. And then, from there we can look at the fours, see if twos start going to four, to see if it's a meaningful pullback or, just a short-term one. The new highs, at least the past couple of days have kind of, not much going on there. You can see the lows are also very muted, but not getting much. Our last pop in the highs was last Thursday. So since then, just kind of nothing. So we just want to be on guard for like the crossovers here, and any spikes obviously will be a downturn in the market. But if these start dying off the highs, then it could be another warning sign. Okay, we did make a nice little change here. We added a couple things. So we did, we added in 20-day moving average and then a 50-day. We already had the 200 in there. So, just kind of, I think they're important things to look at. As far as crossovers, just another feedback. This just came in, so I haven't done like a deep dive on it, but we did make it available to everyone. So yeah, it's best just to do them one at a time. It gets pretty much too much if you do more than one. But you can just click off the key and then add them in there how you see fit. But we thought it'd be just another layer of analysis, just kind of looking short, medium, long term as far as the moving averages, because a lot of the time these are support and resistance on way up and down. So that's in there for you guys to dive in. I'll do a little more analysis on this for next week. So okay, any questions about that?
No, but it looks interesting.
Yeah, yeah. So it's all symbols. So we put them all in there so you can look them. Yeah, you can go back in time and be a nice another level of analysis. So that's what we do. Okay, let's get into SPX. So, you know, obviously way above any of the levels, current days, we're at 100. The longest was 136. Pulled back a little bit. We were kind of approaching that 19, but just kind of chopping. You know, I guess they're into March, kind of higher, lower, big down day, back up. Obviously, we have another kind of big down day today. Not huge down, but so really not much else we can discern from that. But here we go. So we were talking um, about the 20-day. So really, it's just kind of like a battle here. It looks like where are we at? I know we're down 51. Just call it 51.50. So we're about 30 points below that. So it's looked like it's trying to break. The next level down will be that 50-day. That's another 100 points below. Um, but this 20-day has been pretty much the support this whole run up. Since this crossover here in November 2nd. So I think it's only closed below once. So yeah, we're really testing it right now. So we did close below this day, and it's held so far. It popped back above, but I think looks like today, if we're 30 points below, if you can make a run back up above. Otherwise, this may turn, and I would expect it to go, test that 50-day next. Below that would be the bottom of our level 5,000. So we haven't been there, since February. But that's the bottom of our range. 5,000. Top obviously 5,400, and it's kind of where we're at, well off the 200. So, all right, this Russell has been a choppy state one, 2,100. Once again, we're hanging around there, popped above, tried to make another run. No dice today. I think we're, you know, 20, 20, 30, basically right back in the chop. So I think that's just driven by the big jump in rates. We had, I'll just kind of go into that real quick. Where is it? Inflation data came out, obviously a little hotter, 0.4, 3.8, the core 3.5 year over year. So everything was just like a tad hotter than expected. So with that, the 10-year jumps quite a bit. We're over 4.5. That's kind of like our little, first red flag going up. Obviously, the higher, the worse it is, I think, for stocks. But staying above 4.5, I don't think it's a good thing either. If we go back, just kind of look at this chart. And we got up to right around 5 is 4,997. And just dropped like a tank down to, I think it was like 3.7, high 3.7s. And since that, and basically this year, we've just been steadily ramping up. So this is I think a headwind for stocks. I would, if this thing keeps going higher, I would expect some pullback in the market, especially Russell, which is very correlated, inversely correlated with this right now. And we could also start hearing the bank issues, if this thing keeps going up. So, all right, back to the Russell. Yep, so we're just chopping along. So entry point here, 2022. So we're right above that. So that's your nearest level of support. Obviously below that's going to be your stop loss. The current range for this, and you guys probably all have this imprinted in your brains. That's our range, 21 to 19. So we're pretty much back here, mid-range. And I would expect if the rates keep going higher, this could be ugly for Russell. Let's take a look here. So the 50-day on the Russell is kind of like the 20 on the SPX, at least for this move. I don't think we closed below the 50 at all since the crossover. Yeah, that one held above. So we haven't closed once below that 50. So I'd be watching that pretty closely. 2037, where are we at? 20, so we're below that right now. So, those two things I'd be watching right now. And basically this is, we close below those. It's kind of telling us the trends, maybe a day or two. But it could, just dip below and bounce back up. But, it's looking like this trend's, going to be broken here, especially with the rates where they're at. So if those things reverse, obviously we can continue on, but, it's looking like, this trend is, they're trying to tell us this trend's getting broken. So that's kind of where I'm at as far as that. 21 has just been a nightmare for Russell to break. That's the bottom of our range right now, 19. So you can basically use that 50-day, and it's kind of in the same ballpark as the entry price 2022. So that's your support right now. So kind of in between those. And I just the rates are, I think we have more data coming out tomorrow too. Let me see. Oops, sorry. Yeah, we have some more stuff coming out tomorrow too. So that's really the driver right now, I think. Okay, I think that's it for Russell. Let's take a look. Big moves here. Been quiet for a while. Obviously nothing in May. So the first kind of possible cut was June. So now that's no longer June. You can see it went from last week 60 to 16 for a cut. So pretty much 83% right now saying no cut. And that's just been, as of today, a big move. July also moved. Everything shifted. All right, come on.
I think that's what they call higher for longer.
Yeah, but you can see it's pretty much the same thing. I mean, the 50 went from here to here. So everything kind of shifted up. So right now, July, still nothing. If you basically, I guess September would be the first possible right there. And then you look at year end, it's gone from 3 cuts now kind of to 2. So that 30's moved pretty much. So everything shifted down again. I don't know if you guys remember, like months ago, there was like, the average was kind of like right here, like a 1.5 cut. So we're all the way back, to 0.5 right now. So really, it's just going to be inflation ratings and how that, what comes out of that, and the expectations just keep getting pushed further and further away. So, balance sheet here, it's kind of the other one. Had a decent drop here. So we're under 7.5. We're almost, this is basically like, COVID, so level. the start of COVID was 7 trillion. So kind of working our way down there. We'll see if it's still kind of the same thing. I've been talking about for months. Like if rates go higher and higher, it's going to be real bad for the markets, especially banks, small banks, Russell, things like that. Just keep your eye on that. If they come back under control, I'd have green flags flying, but when we're up this high, I'd just be very careful. And especially if we go higher. I mean, if you remember when we hit that like 5, the market was free fall back here. So let's keep your eyes on those and kind of those key support levels, which we're pretty much testing right now. So we'll see how we close, and usually a day or two, see if it bounces back. So I think tomorrow's readings will be kind of key for that, whether they break the trend or not, seeing how those things come out too. So, all right, I'll open up to questions, comments.
The market is getting clobbered today.
Yeah.
With Dow and Russell taking the worst of it.
Oh yeah, I mean,
Oh,
I
sure.
wouldn't be surprised if Russell gets out of state 1 with that big of a drop today.
Yeah, it's hard to say. We already went through this. Like, Shook doesn't even know when it'll go into 2. He wrote it, so he wrote the code. But I would expect possibly, if this continues the next day or 2 for Russell to flip. You start seeing these other ones flip, like real estate's been fairly weak. But I would expect, Russell would be the first one, obviously, and then, eventually these other 2. But Russell will definitely be the first in to see the flip out of these 3, I would think. So maybe a day or 2, if this holds. If we get back above that 50-day, then I don't know. We can see, but not the way this is going here. Like all the currencies, are getting crushed too. I mean, we're almost at parity with the euro. Japan, everything. Dollar's stronger. It's just all headwinds, right? Stronger dollar, higher rates, just big headwinds from our, stocks.
Yeah, this is Dave. I think the probability for Sudhir's comment is higher, a lot higher than it was a day or 2 ago. But with that said, the news of all the inflation reports lasts about a day and a half, like you were just saying, Josh. So it's the same music kind of keeps playing, and it's only going to be earnings that we are going to learn about in 2 to 3 weeks that I think can change that. So if our earnings are still okay and we still worried about inflation, I don't think it's going to matter.
Yeah, we got banks coming up on Friday.
Yep.
Morgan,
I think it's JPM is before market opens, I think.
Yeah. No, that'll yeah. I mean, the earnings is the main driver, obviously.
So Friday will be an interesting 0 day to expiration kind of trading, I think.
Yeah, definitely. Yeah, we'll see how earnings will definitely drive the market. Yeah. Right now we just have to worry about these headwinds, in my opinion. So, I mean, we've had such a huge run. I mean, it's healthy to have some kind of retracements, This is, from end of October, it's like half a year basically. We've been just running, grinding higher, and sometimes it's, cruising higher. So, thanks, Dave. Sudhir. All right. Any other ones? Questions, comments? Okay. let's look at earnings. Yeah, with the last two Q1s haven't been that good, so a little leery how this one is starting out. So we've got one bullish runner active, ACN, so we're down there couple hundred, and then we got a bunch of bullish free runners. A few of them up, they didn't quite hit. I don't know if they did intraday, but yeah, basically couple up, couple down, nothing big right now. We'll see after today's kind of move, but still got time. You know, the first earnings for 17 here and 18th, so still got time on these, but you know, nothing, you know, pretty much break even so far, you know, down $20. So we'll see. You know, I'm hoping it's not a repeat in the last two first quarters, so we'll see. Anyone have questions or comments about that?
No, so far the trades are going okay for me, but
Yeah,
we'll see.
yeah, we'll see.
I missed a few of them because of just schedule, but
Yeah.
they're going okay.
All right. Well, I'm hoping it's not Q1 repeat. So, okay.
It would be a little bit better, I think, if there was a little bit of a pullback before week 2 or 3 in earnings season, and I think that'll help any of the pre-runners that come up after then. I think you know, when we're right at the very top, that's when it's kind of hard, is when we're at the very top at the beginning of earnings season, and
Right.
when earnings are mediocre, then it tends to be kind of iffy. But
Yeah, ideally, you want that kind of like pullback between at the start of earnings, and then you know it's usually a really good.
yeah, I would have rather see the pullback being a week ago or so
Yeah.
myself.
I agree, but I mean, you know, the way the market's been moving, I mean, you only get a day or two of downward action and it's back, you know, chugging along. So we'll see if this lasts any longer than that. So, but yeah, earnings kind of kick off, you know, end of the week with the banks, and then you know things really, you know, start chugging along after that. So, okay, yeah, that's all I had. So I'll just open up to any general questions before we wrap it up.
I just want to, this is Dave. I want to give a shout out to Dan. I'd like to see if he's in there, but his gold, what's I call it? His gold, watch gold is, that was a good thing to watch, and that he put up
Yeah,
last week. So
yeah,
thanks
silver's
to
been
Dan.
crushing it, dude. Like 28 on silver. Silver's actually been outperforming gold a little bit, but yeah, I mean, it's at all-time highs. You know, silver's got a long way to go to catch up, but this one, silver has been outperforming. But we'll see if you know, it's just kind of like, you know, versus like the 10-year getting very volatile. As you know, I brought up the other week, I expect these to start getting a little more volatile too. You know, they've just been so dead for so long. But yeah, definitely interesting market to watch. So thanks, Dave. All right, anyone else? Okay, well, thank you all. We'll wrap it up and do it again next week. Joe will be back for that one, so we'll run a little longer. But thank you all.
Thank you.
Thanks, Josh.
Yep, thanks, Winslow.